Hello friends, welcome to my channel. I'm in Coaching Center. So today I'm going to explain your accounting terminology, or you can say it as glossary of accounting terms. Here you will learn about what all things you will learn in accountancy. What is its explanation? So account, as you know, it is a record that holds the results of financial transaction. So that holds the result of the financial transaction is called as account. Next, accountant's equation. So this equation, it is like basis of balance sheet. It has assets is equal to find assets, liability plus owner's equity. When you do, you will get the assets. Next, accounting. So a service that oversees or measures and evaluates financial information, that gives you financial information for decision making purpose, is called as the accounting. Next, accounts payable. So amount due from the business to your creditors. Amount due from the business to your creditors. And generally, these are short-term liabilities and are shown under the current liability section in the balance sheet. In the balance sheet and current liability section, it is shown. Next is accounts receivable. Amount due to your business from your customers. Amount from your business and to amount to your business you pay, and from your customers you get. Generally these amounts are short-term receivable. It is like short-term receivable, 30 to 120 days, and are shown under the current assets section in your balance sheet. Amount receivable turnover. So a measure used to determine a company's average collection period for receivables, usually computed by dividing net sales by average accounts receivables. Dividing the net sales with average accounts receivables, you will get the accounting receivable turnover. Next, accrual basis accounting. The practice of bookkeeping when income is recorded when earned and expenses are recorded when they are incurred are called as the accrual basis accounting. Next is aging schedule. A schedule showing the length of time an invoice has been outstanding or held. The length of time in which an invoice has been outstanding or it has been held. Aging schedules are normally created for accounts payable and accounts receivable. Aging schedules are created. For example, an aging schedule for account receivable, it can be shown how many days or an invoice has been outstanding. Aging schedules can also be created for inventory. Next, amortization. The gradual and periodic reduction of an amount over time. The periodic reduction of an amount over a time. It can apply to either the periodic write-down of an assets or a gradual extinguishing of a debit, means payment reduced loan principal, also it can say. Next, annual percentage rate. It is the APR, also known as effective annual rate, that is used to put investments with varying interest compounding periods. So on a common basis, it is computed as follows. Like this, you can compute it like APR is equal to 1 plus R by M, where M minus 1.1 is 1.0, where R is equal to stated nominal or quoted rate, and M is the number of compounding periods per year. Annual report. A report that is prepared by the business entity for the end of its calendar or fiscal year. At the end of its calendar or fiscal year, the report that they prepare is called as the annual report, and it presents a company's financial details about the financial position of the company and operating results, and the results for us by interested parties. The results we get from the interested parties, including potential investors, creditors, stakeholders, employing stakeholders and employees want to get the result. Annual report is it will get in the annual report. Next, arm's length transaction. Business dealing between independent and rational parties who are looking out for their own interest. Individual and rational parties who are looking for their own interest are called as the arm's length transaction. Next is assets. Economic resources owned or controlled by a person or a company is the assets. Audit. The result of an independent accountant's review of the financial statement, who gives the review about the financial statement of that company and their footnotes to ensure compliance with generally accepted accounting principles GAAP and to express an opinion on the fairness of the financial statement. Next is audit opinion. So the official results of an audit, a CPA's unqualified opinion, means that the financial statement he or she has audited present fairly, and the financial position and the opening results of that company in conformity with GAAP they have taken with the operated the result, and a qualified opinion that they get under a number of circumstances. They get for the number of circumstances they get a quality opinion. For instance, if the financial statement of that company do not follow GAAP and the client refuses to make the needed changes, and then the client of that company refuses to make the needed changes, an adverse opinion happens when the financial statements are misleading and do not fairly represent a company's position. That time it may happen a bad impact on that company, and we cannot tell correctly about the position of that company. Next, bad debt and uncollectible account receivables. They are called as the bad debt. And balance sheet. A balance sheet is an itemized statement which lists the total assets, that gives us the total assets and the liability of a given business, total assets and liability it gives and that shows the net worth at the given moment in time. At that period of time, it shows about the net worth, how much you have on profit or loss, and how much is the liabilities we get, how much is the assets we got, company's profit or loss. The balance sheet tells us. Next, bank reconciliation. That is the verification that your bank statements and your checkbook balance, that is for taking a verification that your bank statements, that given by the bank, and your checkbook, when you check, both are also a balance, both amounts are equal. Next, bankruptcy. This involves a discharge of the debtor's obligations through court orders. It helps to discharge of debitor's obligation. The purpose of bankruptcy is to provide the debitor with a fresh start, to help the debitor to start freshly, and to have an equitable distribution, of the debitor's assets among the creditors. Next, board of director. Individual elected by the stockholders to govern a corporation. Individual held by stockholders to govern a corporation is called as the stakeholders. Next, bond. It is a contract between a borrower and a lender. Who gives a borrower and a lender, the contract happened between them. The borrower promises to pay a specific rate of interest for each period they will in the contract. They say that they will pay each this much amount for each period of time in that bond, and outstanding, and repay that principal at the maturity date, and they will repay the lender will repay and repay. They should repay the principals at the maturity date. After its maturity date, they should repay that amount. Next, bookkeeping. That is the act of systematically recording of the financial transaction happened in that business company. Systematical recording that financial transaction is called as bookkeeping. Book value, that is the net amount shown in the accountant. The net amount shown in the accountant for an assets, liability or owner's equity item is called as the book value. Break even point, it is the volume point of sales. It is the volume point of sales at which revenues and cost, that it is a point of sales in which revenue and cost both are equal, and a combination of sales and cost that will yield a no profit no loss operation, that will make there no profit and no loss operation. Next, budget. It is a profit statement of management expectations of sales, expenses, volumes and other financial transactions in that organization. They give the formal statement for that. And a budget, it is a tool for planning. It helps in planning and controlling of the business, and in the beginning it can act as a plan, and in the end it can and in the end of the year it can act as a control that will measure the performance of that company, and it will also tell us about the future plans, future performance, and it may improve the future plans of that company. Next is business. So business, an organization created with the objective of making profit by sales of goods or services. So it is an organization that makes money by selling the goods and products is called as the business. Next, business failure. According to law, business failure, it can be either be by technical insolvency or by bankruptcy. Here bankruptcy, here you learned, that is the involves this in has the purpose. It is the purpose of bankruptcy. It provides the debtor a fresh start. It gives fresh start. But if they did not use it correctly, it may cause problem. So the technical insolvency means a business is unable to meet their current obligation and their current goal, if they are unable to meet, and if the total assets, if their company's total assets is increased, their investment is their expenditure is increased, then increased, and their income is less, then it is called as the technical insolvency. And in bankruptcy, that is liabilities exceed the liabilities of that company. If it is exceeded the market value of the assets is exceeded, and a negative net worth is there for a bank, then it is called as the bankruptcy. Next, next, calendar year. So an entity reporting year, an entity telling the year that has 12 months and ending on December 31st, and from December 31st to they have 12-month period till December 31st is called as the calendar year. And for this you have to see the fiscal year, so that you will know about the calendar year. Next is capital. Capital, it is the property or money. It is the money used and owned by a business, and they are used to acquire future income and benefits. So it is the money that is owned by their business owner, and that is acquired, that helps them to give the future income or benefits by putting that money into their business. Next, capital account. An account, it is an account where an owner's or partner's interest in the business is recorded. It is increased by owner's investment and net income, and decreased by withdrawal and net losses. So capital account, it is an account where owners or partners interest in the business, the owners and partners interest has been recorded, and this capital interest, it will capital account, it will keep its interest investment increasing when owners investment and net income will be more. Owner investment will be less, and net income will be more, and decreased when withdrawals will be more, and net losses will be more. So capital gain or loss, the difference between the market and book value at purchase or other acquisition realized at the sales or disposition of a capital asset is the capital gain or loss. Next, capital expenses. A capital expenditure is one that will benefits 1 year or more. It will benefits the for 1 year or more, and it can increase, and also it can increase the quantity and quality of the service that are gained by the assets, and it is charged to an asset account. It belongs to an asset account. Next is capital lease. So, although the lease does not legally own rental property, but the property is theoretically acquired and recorded as an assets with the related liability. It will be centered as capital lease, or it will be owned. Next is capital stock. The ownership shares of a corporation. The ownership shares of a corporation authorized by its articles of incorporation. They include included preferred and common stock. They also include there in that article. They also include their preferred and common stocks. Next, cash basis. A bookkeeping method that helps them to know about their revenue and expenditure at the time of cash receipts or payment. At the time of payment, they may know what all the revenue we have, expenditure, and how much money we have to give for them. It will help the bookkeeping. Next is cash flow. Generally, it refers to the difference between the cash receipt and disbursement over a specific period of time. So, difference between cash receipt and disbursement. Certificated public accountant. A designation given to an accountant. A designation that is given to an accountant who has passed a uniform CPA examination. A certification that is given to an accountant who has passed their CPA examination and has met other certified requirements they had finished. Next, CPA certificate has been issued for that account and monitored by State Board of Accountancy or some of the agencies. They are monitored. Next, chart of accounts. A listing of all accounts used by a company is called as chart of accounts. Listing of all companies by accounting. List of all accounts that are used by a company is called as chart of accounts. Next, charter. It is also known as articles of incorporation. Charter. It is also known as articles of incorporation. A document issued by a state. A document that is issued by a state that gives legal status. A document issued by a state that gives a legal status to a corporation. That gives a legal status to that corporation and details its specific rights including the authority to issue and a certain number of shares of stock also given is called as the charter. Common stock. A class of stock issued by corporation. It is the most frequently issued type of stock, and also it carries with it a voting rights, and however it is the secondary in proper priority to preferred stock in dividend and liquidatory rights. Next, compounding periods. The period of time for which interest is computed is the compounding period. Next, consignment. In a consignment, the consignor or the owner of the goods who transfer goods to the consignee. The consignor retains legal title. The consignor gets the legal title and includes the goods in his inventory and his inventory, and the consignee is acting as an agent in an attempt to sell the goods. He is acting as an agent who is trying to sell that goods. Although the consignee is temporary holding the goods. The consignee is temporary and he is holding the goods, and the inventory is not an asset on his books, and that inventory he is not an asset on his book here. That way his bookkeeping in that he wrote is not an asset. If a sale occurs, if that sale occurs, the consignee deducts from the selling price his commission and related expenses remitted or balanced by the consignor. They balance that related money what they have got. Next, corporation, a type of business organization chartered by a state and give many of the legal rights for that business, and ownership is represented by the transferable shares of stock is represented. Cost of goods sold, COGS. So the amount determined by subtracting the amount we get by subtracting the value of ending merchandise inventory from the sum of the beginning merchandise inventory, and the net purchases from the fiscal period is the cost of goods sold. Next, credit. An entry on the right side of the ledger account is the credit. Current assets. So current assets are those assets of a company that are expected to be converted to cash, sold or consumed during the normal operating cycle of the business, like cash, accounting receivables, short-term investment, inventories, prepaid expenses, many other things. Current liabilities. Liabilities to be paid within 1 year of the balance sheet date. It is paid within 1 year of the balance sheet date. Current ratio. The current It is also known as working capital ratio, a measure of liquidity of business and equal to current assets divided by current liabilities is the current ratio. And debit. An entry on the left side of a ledger account is called as the debit. Depreciation, the expenses recognizing in writing of the cost, the expenses that is recognized in the writing of the cost of a plant or machine over its useful life, giving consideration of wear and tear, observation and salvage value. Method varies. Example, take straight line method, accelerated methods such as sum of the years digital and double declining balance method. Primarily, this accelerated depreciation is chosen for a business tax expenses, but straight line is chosen for the financial reporting purpose. Next, dividend. It is that portion of a corporation's earnings that is paid to the stakeholders. Dividend, that portion of a corporation's earning that is paid to the stakeholders is the dividend. Drawing. Distribution to the owners of a solo proprietorship or partnership is the drawings account. The account used to show the withdrawal of earnings by the owners, the withdrawal of the earnings of a solo proprietorship or partnership. Earning per share, the computations of a corporation's earning based on their number of stock shares outstanding at a given point of time. And embezzlement, the act of employee stealing money or assets of the company, it is the embezzlement. Next is the factor. To sell accounts receivable at the discount before they are due is called as the factor. Fair market value, the price at which a willing seller will sell. And a willing buyer will buy the product when neither is under completion when he is not under completion to sell or buy. Any both have reasonable knowledge of relevant facts. Next, FASB, Financial Accounting Standards Board, the private organization that is responsible for establishing the standards of financial accounting and reporting it in the United States, is FASB. Next, FIFO, first in first out type of inventory valuation. The first goods purchased as assumed to be the first goods sold. Means the first goods that we purchased, that is assumed as first goods that is sold. Fiscal year, so it is a business reporting year that covering 12 month of period, not necessarily ending on December 31st only as a 1 year, but still from March if you take till next April, like that it may happen. Next, fixed asset, permanent assets of a company that are required to regular conduct of business which will not be converted into cash during the next year is the fixed asset, like land, building, furniture and fixtures. Next, fixed cost of a operating expenses They are the operating expenses that are incurred when providing necessities for doing business and have no relation to the volume of production and sales. They have no relation of volume of production and sales, like example rent, property taxes, interest expenses. Next, FOB, free on board destination. The sellers of merchandise bears the shipping cost and maintain ownership until the merchandise is delivered to the buyers, is called as the free on board destination. So okay friends, till here it is enough. I will explain the next more concepts of this chapter, the accounting terminology. Here you learn till now we have learned more information about different words in accounts. So still in next video we'll learn about still more words, about the explanation about more words. So okay friends, if you like my video, please give a like. How was my video? Please give a comment and subscribe my channel MN Coaching Center for more video. Still there are many uh, names, many words that you have to know in the accounting. So these all I will explain in my next video. So okay friends, till then take care, have a nice day. Until now what all the words you have learned, I think you understand. So okay friends, I will see you in my next video. Till then take care, have a nice day. Bye my dear friends.